Hello everyone, welcome back to the artoftrading.net. This is Trader Stewie here making you another video. I want to do a video this time about a trade that we did on Friday. This was a classic trade, that I like to call the short squeeze trade. Um, where you enter a stock as a long position in a stock that's kind of like heavily shorted, anticipating like a spike or a quick short squeeze spike. These are kind of trades that you've been seeing a lot more lately. In many stocks. Um, so here we go. So this is a stock that I was looking at for a few days, quite a few days. It was on my watch list around here, around this area right here. However, we did not want to, even though we knew that an imminent is gonna a breakout is imminent right here. As you can see here, a beautiful ascending triangle, that took place over many weeks, 2 3 months. I mean, this is a beautiful pattern. But ideally, we like to buy here ahead of a breakout. If a breakout's imminent, you want to buy ahead of the breakout. But this time was different. We did not want to buy ahead of a breakout simply because we had earnings were on the stock coming in on this day right here. So we did not want to buy ahead of earnings because, no matter how beautiful a pattern looks, no matter how bullish a pattern looks ahead of earnings, you never want to buy ahead of earnings because, holding in front of earnings is just gamble. It's just gambling. I mean, I can't tell you how many times I've seen stocks that look so perfect and so ready to move higher, and then earnings comes out and then they disappoint and the stock drops 20, 30%. You know, so you never want to short or go long any stock ahead of earnings. You really don't. It's such a risky way of trading. It's almost not even worth it, to be honest with you. It's much better to wait to see what the reaction looks like afterwards, and then plan much better, much smarter trades after the fact. So anyway, so what happened with Cell is that it gapped up over a point on earnings. So that was a pretty big gap, almost like a 10% gap up on earnings, and the stock continued to run. So the stock had a good, so that tells me that there's still buyers left in this thing. There's still buyers left in this thing. Also, I mean, a stock like this, it has like a decent amount of short interest in it. So you know that not only will there be new buyers, but the potentially people who were stuck in short positions, over the last few months or whatever, few days, whatever. Now they would need to cover. They would need to cover their shorts too, making the stock even more explosive. So these are the kind of stocks I love to trade. I love to trade stocks they're kind of explosive in nature. I like to say that they look angry, that they have an angry look to them. It means that they move fast, they move quick, and they have a high short position in them. So when the shorts get it wrong and then the stock starts to break out higher, the stock can move very aggressively, very quickly. So I call these like angry moves. Like a stock looks angry, has like an angry look to it. So anyway, Cell definitely has the typical angry look, which I look for in a stock. This is the stock. This is where it caught my attention. It was right here. Obviously, the stock gapped up on earnings, had a huge day here. But look at that, guys. Notice that the stock kept moving sideways for a few days, creating a bull flag pattern. Look at that beautiful bull flag pattern on the daily chart. And so it caught my attention here on this candle right here. So ignore this little wick here. Ignore that. Just focus on this little candle right over here. So I saw an inside day. I saw volume picking up, as the stock starting to like work its way higher. That was what I saw on the daily. So quickly I zoom into the 5-minute charts. Okay, so this is what I saw on the 5-minute charts. So this was the February 10th. This was February 11th, and we're talking about February 11th now. So we're looking at this action right over here. So as you can see here, guys, the stock gapped down a little bit on February 11th, shot down for quickly, and then quickly recovered, filled in that gap, and then started to rise here. But look at this, guys. This is where the stock caught my attention, really grabbed my attention, is right here. You can see here you have an area of resistance that's pretty clear over 2 days. You had one here, you had another one over here, one more here, and look at this, guys. And today, for the fourth time, you had resistance again. So that area of resistance now is going to be the 1280 area. See that? So it hit 1280 again in the morning. Hit it once, twice, 3 times, 4 times. This is now a very strong area, guys. So imagine a break above this, and this stock is going to skyrocket because there's going to be a lot of people eager, waiting to buy here, either to waiting to buy or to ready to cover their shorts here. So when a stock moves like this is classic short covering behavior. When a stock starts to spike higher like this, these are shorts really covering their positions and new buyers coming in aggressively. So So you always want to be trading stocks that move like this. If you're trying to trade momentum like I do, you know. So basically, what I saw here's where our entry came in. Our entry came in at this pattern right over here. Notice this, guys. Look at it. You had a spike here, and you had like a few sideways pattern, a few sideways bars, candles that got smaller and smaller and smaller as we approached the high of resistance here. Take a look, guys. Same thing here. Same exact pattern. This was on the daily chart. This is the 5-minute chart. See that? Here's the daily chart. You had this pull, you had this rally here, sideways consolidation as it approaches resistance. So you know a breakout is going to be imminent. Same thing here. Stock rallied here. Small little candles as they approach resistance. So you know a breakout is imminent here too. So isn't it interesting how the same exact pattern on the same exact stock are visible both on the 5-minute chart and the daily chart? This is very interesting. You know, this is called fractals for anybody who wants to research them. Um, so anyway, so you can see here, this is where I alerted the stock to my subscribers. It was right in this zone right over here. It was that 1275. So we sent in the alert subscribers at so we long sell at 1275, stop at 1250. So use the day's low as your stop. So this was me a stop loss at 1250. Your entry was 1275. So literally you're risking about 25 cents. So you're risking 25 cents, to make a return on, who knows at that point. But my target for this trade was 13.20. So you're risking 25 cents to make almost 50 cents back. So that was a pretty decent risk reward. So a 2-for-1, that's always good. And as you can see here, guys, look at that. The volume as the stock here opened lower a little bit here, as it shot up here, volume started to pick up. See that? This volume here, these two volume bars picked up. Now the stock starts to quietly accumulate more energy right under resistance. See that? Right under resistance, once the stock starts to accumulate energy like this, and then volume starts to come in, starts to pick up like that, then you know a breakout's coming and it's going to come big. So I mentioned the stock also on Twitter to watch the stock. Sell looks ready to break out, and indeed, it did break out. Good volume came in, guys. Look at that, beautiful volume came in. At first my intention was to swing trade this position. That was my intention, was to carry it overnight. However, the stock, it achieved my target of 13.20. So I figured, I'm not going to be greedy. I'm just going to sell the position and then move back to cash. It was a good trade. It was my first trade of the day. Might as well just book the gain, and then move back to cash, and then we can reevaluate later what we're going to do. And look at that. I mean, it was just crazy how the stock, the minute it hits 13.20, 13.22, which was where we took profits right around right here. So we bought here, sold it all the way up here, and look at the whole day, guys. The stock just kept kind of giving back its gains. And it kind of so basically it did not, and this is what it looked like at the close on Friday. So as you can see, guys, literally it was basically like a non-event day for the stock on a daily chart. However, if you take a look at the stock on the 5-minute chart, we pulled a very, very nice trade out of this. You just have to be nimble enough to get in and get in when this trade was not very obvious. Once the trade starts to break out and the whole crowd started to know about this, the trade became obvious. That's it. It was too late. You can't be chasing it here. It's too late. So the way I like to do it, I like to buy it here when the trade is not very obvious, but you have all these little hidden little messages that the stock is sending you, telling you, hey, I failed at resistance once, twice, 3, 4 times, and now I'm giving you another chance here. I'm hovering right under resistance. I'm ready to break out. I'm giving you a good volume. These are all clues it's giving you. So you gotta take them. You gotta take when that happens. Take the trade, put the close stop. I mean, 25 cents to risk on a stock like this, that's really not that bad. That's maybe like 1.5% or 25 cents. You buy 1,000 shares, you're really only risking $250 to make, who knows, to make like 50 cents. To make $500. So that's a pretty good risk reward. If you were an aggressive trader, if you were playing this pattern alone, you can maybe put a stop loss right here, maybe like, let's say at 1260, where that pattern would completely break down. But me, I wanted to swing trade this position initially, so I put the stop loss here at the day's lows, and as you can see, the stock broke out nicely. We took the profits here, and I never looked back, and the stock basically just kind of fell apart ever since then. But like I said, on the daily chart, the pattern is still intact. So this pattern just needs a little bit more time to set up a little bit more. So I will definitely be looking to enter this position again. However, this time I'll be looking for it to set up a little bit better, maybe a little bit more sideways action before a more real breakout can take place. All right, guys, I hope this helped, and I promise I'll do more videos in the future. And congratulations to all those who took this trade. You have to be very, very quick to get in, very, very quick to get out. This is the kind of market we've been in lately, though, guys. It's been kind of like a choppy ride. So you want to be able to get in quickly, and you want to be able to get out fast. This is not really the time to be buying stuff and holding on. These kind of trades, they're not really giving you that kind of opportunity. Right now, the trade is, you get in quick, you get out quick. You shoot maybe for singles right now, maybe 50 cents, a dollar. Then later, once the momentum starts to come back really aggressively in the market, or you see stocks start to break out with more aggression, then you can start shooting for much bigger returns, like 20, 30% gains. But for right now, you take 2, 3, 4, 5% gains, take them, book them, and then move on to the next trade. All right, guys, I hope this helped. Take care.